Hello, everyone, and welcome back. It is very nice to talk with Austin Fitch again, chartered financial analyst, the highest designation one can obtain in the investment field, and the head of practice at Horizon Investments. He has joined us a number of times, but that does not diminish the message that Austin brings with us. He is always ready with new and interesting information. I think he has it today. Part of the reason we're recording today is because an agreement has been reached in the war, the United States and Iran. So we'd like to talk just a little bit about that and how it may impact the stock market. Before we get there, of course, I've got to introduce Austin and let him say hello to everyone. Austin, good to be with you again, and thank you for joining us.
Absolutely. Thanks for having me, and looking forward to the conversation.
Yes, we'll do as we have decided in the past. We'll keep it about 20 minutes or so. Keep it to some very specific parts of conversation that we've had in the not so distant past to share with everyone here. And let's jump to it. So with a framework or a cooling off, if you will, of war and now no deal formally signed as today, and knock on wood, that is finished. But with that said, the cooling off and a framework in place, how does Wall Street, let's call it short, and none of them are, how's this? One day is too long in my, what would be considered a short war. How does it and say, well, we don't care what the framework of the deal is, or we don't care what the details of a deal are. We care that there is no war. Or we do care what the framework is. We do care what the numbers look like that will have an impact on the stock market.
Yeah.
Which that is investors.
No, I think that's a great question, Lou. I would want to tell you that the market is a lot more sophisticated than we all believe, and they care about all the nuance and the details, and they really want to get into the weeds. But in reality, the fact that there is a deal is really the headline, and that's what carries the day, right? It's this idea that this uncertainty that we've lived with for a few months now is starting to dissipate. And as we've talked about in the past, anytime there's uncertainty, the market just wants there to be less uncertainty, right? So I think what you're seeing, and you've seen it even since the announcement that there was a deal, even though to your point, it's not formally signed yet, like we're moving in the right direction. Markets are responding positively. I would tell you in all seriousness, like the deal was maybe really not even like the main concern. It was really like the shipping routes that were being disrupted. And like, I mean, we can talk about oil production separately, and maybe how it's not as important as it used to be. But in reality, like it's the Strait of Hormuz and the fact that we weren't getting ships through that strait, which obviously is a big transportation kind of bottleneck. If you think about stuff that comes out of the Middle East and it needs to get there, vice versa. So the fact that that's going to open back up as part of this deal, that's really what the market probably cares the most about. But again, the fact that there is a deal, there's going to be less uncertainty. Like that's the positive in all of this, the nuance and the detail. Like I said, it absolutely matters, but the market probably doesn't care nearly as much about it as other folks do.
Okay, and I want to stick with that for just a few moments because I think there are a couple of things in there from the standpoint of let's say let the oil flow, which could be one man's opinion one of the worst announcements after you've just been to war with a country. But anyway, let the oil flow. Has it ever stopped flowing? I mean, really? So we've all read if we tolls being charged to go through the Strait of Hormuz.
Yep.
So was it ever actually closed, or was it just more costly to do business? An impact on the stock market, and I'm speaking about stocks specifically. We'll leave the bond market out of it for a moment. But was there ever actually an impact on the stock market? Because it really doesn't seem as though there have announcements. deal, is there ever actually impact the stock market?
Yeah, no, again, I mean, I think that's a fair question. I mean, yes, there was an impact, right? And to your point, did it ever actually stop? Maybe for a couple days, but as you pointed out, it just became a lot more costly to get through that kind of bottleneck from a transportation standpoint. So if you're looking at that, that the strait specifically, yes. It did stop, but it was much shorter than probably a lot of us were led to believe and actually did believe. I think to your point, though, I think what's important to know, and part of the reason that the market maybe didn't react as negatively as we otherwise would have expected has a lot to do with the fact that the world as it stands today is much less reliant on energy than it was even 5-10 years ago, but definitely 25, 30 years ago. So a lot of folks have kind of in the back of their mind, right, the Gulf War as kind of that anchor point for how the effect of kind of oil and oil prices and what that can have on the global economy. Like if you look at where we were in the early to mid 1990s versus where we are today in terms of the need for energy, essentially to generate GDP, if you want to think about it that way, like we're less than half of where we were then 30 years ago. So we're much less reliant, much less dependent on oil specifically, and really energy just generally. We've become a lot more energy efficient. So a lot of that response that maybe we didn't see comes from the fact that we just don't like the energy intensity, right? The requirement of energy for the economy has gone down dramatically, right? There's a lot of things in play there, right? Maybe we're a more service-based economy, specifically in the U.S. You've become more energy efficient, as I've said. Like there are a lot of things that kind of go into that, but the impact of even the closing of the strait or the slowing down of things that were going through that strait became pretty apparent in the last couple months.
Okay. And Austin, I just want to say for the record, this is not an episode of 60 Minutes where, I'm the hard-hitting reporter, and, you're George Shultz of the Reagan administration back in the day, okay? About the Middle East, but it is interesting. It is important. It has an impact. That's why we're taking this time. So I do appreciate you taking on those questions because I have them personally and I am asked them professionally. And I think it's good to share with clients. So Wall Street ignoring, if you will, and I will use the word ignore, they do. Yep. And recently I was at a few-day conference with Horizon Investments, and Scott Ladner, the chief investment officer of Horizon Investments, was very bullish. And I stress very because that is, his term, his use of words. He's very bullish. Part of that was a conclusion and AI spending, where we are in the site, its impact. Please share with everyone why Horizon Investments at this bullish, you see the stock market in a very positive manner. Yeah.
So there's a couple things that go into that, Lou. I think kind of the first.
You're unfrozen now.
Yeah. Hey, there we go. I think the first piece comes with that is the strength of the consumer, and this kind of heading into if you think about the war at the beginning of this year, the strength of the consumer is something that absolutely, like, we cannot talk enough about, right? If you look at the amount of cash that's been stockpiled, the amount of money that's essentially sitting on the sidelines that maybe folks built up over the course of the last 3, 4, 5 years, like that's a benefit. You also have the benefit, and this is kind of a lagged effect of interest rate cuts, which are working their way through the economy, right? We talked a couple years ago now at this point about higher interest rates and how lower interest rates maybe make for a more conducive environment for businesses if they want to make investments or those types of things. So like that is absolutely in play. But probably the biggest one, and we've talked about AI a little bit over the last couple calls that we've done, like is the productivity gains that we've seen from the economy just over the last couple years at this point. And you're starting to really see that flow through from a margin standpoint. So if you think about profitability, if you actually look back at productivity and look back like 30 years, right? What you'll note is that there were minimal productivity gains, call it from the early 2000s until almost 2025. So think of it as almost 25 years. Productivity gains in a number of different ways, depending, it doesn't really matter how you measure them. We basically grew about 2% a year, maybe a little bit more in certain years. We essentially doubled, or you saw like a 50% productivity gain over a 25-year period. You've seen that same gain in productivity over the last 2 years. Right. So you're seeing, and whether we can point directly to AI or tangentially to AI, like it's absolutely like you're seeing these gains flow through to the bottom line for companies. And that's something that's extremely valuable, because if you look at what the market values, right, like more revenue is great, more earnings are that much more, that much better. But at the productivity side, right, if you can maybe generate the same revenue and more earnings from a productivity standpoint, then it's a question of like, well, then let's go grow sales and grow productivity. And that's what you're seeing, right? If you look at like earnings season for companies that just finished up over the last month or so, like you're seeing earnings reports that you don't normally see unless you're like coming out of a recession. Right? Like companies that are like bouncing back off the bottom. And obviously we're not coming out of a recession. You could say maybe, 2022 was a bit of a lull, right? And a pullback from a market standpoint. But it wasn't an '08 type recession by any stretch. So what you're seeing is like you're seeing an economy that's like full steam ahead in a period where you wouldn't normally expect that. And that goes right in line with kind of what's driving our view on kind of the future for the next, call it 6, 9, 12 months. Okay.
Well, and it is an impressive statement by Horizon Investments. I speak with a lot of investment firms. It is the most emphatic towards a positive outlook longer term. We'll say in longer term, we do not look at it 3 to 6 months. Okay. We don't work it that way. We look 3 years. Okay. That's 3 to 6 months. We'll just say are for the investors that are playing on their phones and trying to, buy widgets, whatever it is they're trying to buy and then sell them right away, which I appreciate the positive outlook. The AI gains, Tranquilli Financial Advisor, and I think this is good as well for clients to hear. We use it in our note taking, which allows us to have a conversation and for me to not hold a pen in my hand and listen and write and then take those notes. Instead, the AI note taker, which has become exceptional at taking notes, does so for us, leaving out any personal identifying information, which we are able to do. Fantastic. The productivity gain is phenomenal there. Now, where I bring in Tranquilli Financial Advisor on another part of this is we can't let it in. We can't let it inside our investments. We can't let it inside our technology because we don't know what it will do. And no one has, if you will, shown me what will it do when it gets in there. I hear all the stories of AI bots speaking to each other and creating whatever it is a better AI model. Well, I love it. I love the idea of the productivity, but I do have to keep it at arm's length because I have to protect that identity for everybody.
No, so, and Lou, I would just clarify as well. On Horizon side, we're using AI in a very similar manner to how you guys are using it, right? To drive efficiency, to help folks in their day to day. We are not using it to make investment decisions. So just
No. That's
putting that
exactly
out
right.
there.
Okay. And well, good. And I'm glad you do, because it does need some clarification.
Yeah.
Maybe someday it becomes part of the team that way, but at arm's length, because it really is going to break the internet. Meaning it will change the version of the internet and the way that we use it moving forward, which is incredible. It'll be so much fun to see that and everything else, and interesting and worthwhile investment. I do have to, and this is a bit of a out of left field for you, but not necessarily, SpaceX.
Yeah,
I can't let this go without hearing. Has Horizon? I mean, tell me what's Horizon's take on SpaceX, and before you do, I'll give you the Lou Tranquilli on it. All right.
Yep.
Which is great. Cool. Very cool. And sure, it could become part of Tesla. Well, it could not become part of Tesla. Okay. I've spoken to people who value Tesla incredibly high, and others who say, no, it's a car company with a technology attached. You have to separate the technology to get to the real value of it. So with that, my view on SpaceX is, if you're buying it right now, you're probably buying it for your very young children, or your grandchildren.
Yep.
It doesn't make any money, and we like companies that make money.
Yep.
Okay, I call a wacky that way. Okay, I like profitable companies. That's what we're talking about. Efficiency, productivity, profitability. Well, this doesn't have that. It has none of those, as a matter of fact. It's they're blowing up rockets on purpose, because of the inefficiency. So explain to me, why is it valued so highly? What is Horizon's? Give it an outlook. You don't have to say it'll go up, it'll go down.
Yeah.
Just give us a thought process on why it was so incredibly valuable to a lot of people.
Yeah, I mean, well, why was it so, I guess, built up? I think has a lot to do, obviously, with the leader of the company, right?
Sure, no doubt.
So that has a lot to do with it. But I think you're absolutely right in the sense that right now, as an investment, it is much more in the speculative camp than anything else. Now, that being said, what they're talking about, some of it sounds really cool, right? Like, and could it be, Google in, the next Google 20 years from now? Possibly, right? But it also could have a lot of fits and starts between now and then, if it gets to that point. So, I think from our perspective, what you're looking at is, honestly, like it's an IPO just like any other IPO, in the sense that it gets probably a lot more press, especially the ones that are well publicized on the front end, and you'll likely see like a reversion to the mean, a comeback to earth type, no pun intended.
I was going there too. I was hoping it was a pun intended.
But I think you're going to see that over the next little bit. Now, the one caveat with SpaceX is, because of its market caps, like just because of the size, the sheer size of how it's going to play in the market, it may be propped up a little bit longer than a normal IPO, because there's this like embedded demand from certain indexes that are going to have to buy it. So that's getting a little bit into the weeds in terms of market dynamics. But like, for folks that are used to seeing IPOs skyrocket the first day and crater the next day, it's probably not going to crater immediately. It may be a longer path back to whatever kind of that normal price is that the market ends up finding. So like that's how kind of we view it, in the sense that it's probably going to come back to normal. It just may take a little bit more time, but over the long term, could it be a cool investment over the next 10, 15, 20 years? Yeah, absolutely. But like you said, generally speaking, we're looking for companies that, have profitability and they're using the efficiency to drive, the bottom line. And you saw this, right, with Amazon for almost a decade, right? It's a similar story, right? They didn't make money for forever. And now they're just printing money left and right. Like, could that be the playbook for SpaceX? Possibly. I think a lot of people want to believe that's the case, but like, it is way too early to get a sense of if that's actually going to play out that way.
Well, I cannot overstate how thankful I am that you managed to throw "I want to believe" in there, because I am just a huge X-Files fan, all right, from back in the day. So I don't even think you meant to work that in, but that went perfectly. So all right, so that's enough time on SpaceX. It is, I think right now it's cool. Okay,
Yep.
I own one share of the Green Bay Packers. That's kind of cool. All right, and that's all it is. For
Yep.
now, it's kind of cool. Let's see it make some money. All right, because we are going to invite you back in the fall and talk about interest rates and Warsh as the new Fed chair and everything else. So we'll get to that. Let's take a summer look at the stock market.
Yep.
We've talked about the framework of a deal in Iran. Now, normally, and just last year, I sent out a video preparing listeners and clients for a volatile summer, which did come about, and no self-congratulatory pat on the back. This has gone on for 100 years.
Right.
Sell in May and go away is the old saying. Well, this year, how is the summer impacted? And the reason, by the way, for volatility in the summer, extreme volatility in a lot of cases, is that it's a low trading volume. So on a day-to-day basis, there's just not as many people trading stocks. Right. So any up and down swing is a little more, has more of an impact. I'm sorry. So in the summer of 2026, how does Horizon see this stretch, let's say, leading up to September? Will calming in the Middle East help that? And specifically, I should say Iran, because obviously the whole Middle East is not calm at this moment with the Strait with Gaza. I'm sorry. So how does Horizon view the summer? Will it be less volatile, more volatile, same as always?
Yeah, I mean, I think the easy answer is it's probably pretty similar to an average summer, but I'll kind of unpack that a little bit, because I think what we were lining up for was actually a more volatile summer than anything maybe we'd seen in a few years, right? So if we went through the summer still in the midst of kind of the ongoing war, I think we were lined up for a really volatile summer. And I think the deal really kind of brings us back to normal. So to your point, like, that still doesn't change the fact that there's probably lower than average trading volume in the summer than the rest of the year, right? It doesn't change the fact that people go on vacations, and that means there's less liquidity in markets just across the board. Like, none of that really changes. So I think you still get some of those, wilder swings than you would normally expect on any given market day. Now, that doesn't mean that the market's going down. It just means that, what normally would have caused the market to move 1% maybe causes it to move 1.5% or 2% in the summer because of the dynamics that we were talking about. So I think the good news is that you have a deal, and that means that there's just less embedded volatility to begin with. It probably doesn't change the fact that, right, like, it's still summer. People are still on vacation. There's less participants sitting at the desk making trades. And if that's the case, like, just kind of by definition, markets move a little bit more than they otherwise would with that in play.
Okay. Well, Austin, we've taken a little bit more time than I said we would, but SpaceX has a way of doing that to you. Okay. And that's last person we spoke with, we talked about Tesla, and now we've spoken about SpaceX. We're leaving it out of the next conversation. So
there you go.
You'll do it again in the fall.
Absolutely. Looking forward to
Excellent. Thank you so much. Always appreciate you. Austin Fitch, head of practice, chartered financial analyst, Horizon Investments. We will talk with you again soon.
Awesome. Thanks, guys.